How's everybody doing? I hope this video finds you well. Hope everybody's doing well. My first two videos were kind of long, 40 to 50 minutes each. I wanted to hop on here, make a 10 to 20 minute video, kind of just mainly going over a turtle soup for dummies in a light where anybody can see it, anybody can understand, see where we're delivering from and where we're delivering to. Alrighty? Got some questions listed here that we're going to ask ourselves and go over. Um, keep in mind while we're going over the charts and, go from there. First thing is we're going to trade with the high time frame order flow against the low time frame order flow. Going to kind of show what order flow is. And it's mainly where we're delivering from, where we're delivering to, and where orders and what direction orders are flowing to. That's the simplest way to describe it. It's not, fully what I would say terminally correct, but that's the basic way of understanding what it is. We're going to ask ourselves what gaps are obvious, what buy side and sell side levels are clear, such as fake double tops, fake double bottoms. Okay, we're going to ask how and where is liquidity engineered, what PD arrays are being respected and disrespected, what time-based liquidities are we under or above. Okay, are we also in a premium or a discount of the accumulation range? All right, and when I say that, it could be, a high time frame range. That's just a monthly range that we're, still within. It could be a weekly time frame range, a daily time frame range, 4 hour, 1 hour, sometimes even a 15-minute range. All right. So we're going to go ahead and go to the chart with keeping all of these questions in mind. Alrighty. Okay. So we're here on the monthly time frame. We're going to ask ourselves the first question. What gaps do we see? Also, we have one here. As well as here. Okay. I'm going to keep that one open just for sake wise of keeping the chart clean. We also have one down here. We'll just mark the whole thing since it's open. Okay. We also see with the high time frame order flow that we're bullish. We're in an expanding market. Okay. So when saying that, that means that these fair value gaps here might not have to get retraced to. Okay. All right. They could just be breakaway gaps, that engineer liquidity to get people to want to short. All right. We also see that we are being, we are reacting to this fair value gap bearishly to the downside and reacted to this fair value gap bullishly to the upside. So you could say we're almost kind of in a middle range here. But you got to keep in mind that we're on the monthly chart, so it's not as big of a range, or it's not as small as a range as you think. This is, a lot of movement. Okay. We also see that within this swing low right here, with these two swing lows and this swing high, we're coming in to where equilibrium and OT of the range are, which line up with this fair value gap. Just keep that in mind. Coming down to the weekly, you see we started reacting bullishly after sweeping the sell side level, creating and engineering some liquidity down here with failure swings, leave a breakaway gap right here, as well as a wick BPR, and then react to the breaker, or to the fair value, whatever you want to call it, order block, whatever. We also leave multiple VIs, as well as multiple fair value gaps open as well. Now seeing this on the weekly time frame, We have two fair value gaps open. Excuse me. We have some sell side liquidity getting engineered. Alright. With multiple equal lows and an open fair value gap above. Below. Go down to the 2-day time frame. See that we almost made it to the order block, but made it to the wick of the order block here and started delivering from it. Alright. No very obvious fair value gaps. Multiple fair value gaps left open. So we started reacting very bullishly as soon as we swept the sell side level. Alright. We also created a breaker here and left this gap open. Alright. Come down to the daily. And see that we have an accumulation, and another accumulation, as well as another accumulation, and your final accumulation. So what would you like to see here? You have a couple obvious gaps above, obvious gap below, and you're within a range. So we saw on the monthly, we started delivering bullishly, but then started delivering bearishly from a monthly fair value gap. Weekly as well. Excuse me. As well as the daily order block. Screen candle right here. So from this accumulation, we'd like to see the sweep of one end of the range come into 50% of the range and then sweep the other side. So let's see what we do. We engineer some more equal lows. Break above the high. And then start reacting from the order block. It's now a Tuesday. So you should either see this Tuesday or Wednesday. Keep in mind, I can't see the news because we're just kind of going over this. But news is also a very important factor. But this is just the turtle soup for dummies. So, we're just keeping no news in mind. We also see some engineered liquidity, a long wick coming into Wednesday. So we would like to see Tuesday or Wednesday be the high of the week. It might end up being Thursday. But just because of this formation, I don't like how we're looking to not sweep this sell side level unless we SMT. Okay, so you see Thursday creates this rejection block candle that I don't think personally with this type of formation we should go above. So now we start reacting bearishly. And just off this, you could probably enter here, stop above the high, hit like a 1 to 2. But that's not how I trade. You wait for the retracement. See, now that with order flow, we've created a long wick. And I don't see this as a turtle soup, but more as a breaker. Fill the long wick to and through. And we should deliver to the sell side level. If you want to range it out, we'll get out one at 50% of the range. Alright, and then form a long wick after sweeping this sell side. With order flow being to the bearish side, I would like to see more of a aggressive pass into this. Okay, that's just unfortunate. Well, Mike went out. Sorry about that. But yeah, with this being Tuesday, and us coming into the VI and fair value gap, and like I said, well, I don't know if it might have cut out. But I want to see us leave a fair value gap coming in to our key area. So we've left a bunch of wicks that failed to close, under this level. I'd like us to see us leave a fair value gap and maybe dig down into this order block. If we break, I don't think we break this low. I don't think we should. But we should definitely at least tap into the order block. Perfect. Let's see what day of the week this is. Okay, so we're coming into Friday. Alright. And that in itself is, almost, getting into where, if you miss your first turtle soup entry, you can get into a second order block entry right there and get out, mitigation at the other order block or 50% of the range, and then get out at an opposing. You can get out here at this sell side level, re-enter on the fair value gap breaker. Trade it however you want to. Because once you are able to see this original turtle soup here, and then order flow change, right? You're able to almost just trade any strategy. Order block here, fair value gap, after creating the long wick and breaker, you can enter again. There's really no limit to it. I just like to enter as high as possible if I'm selling, or low as possible if I'm buying, just to mitigate as much risk as possible. Let's go a couple days forward. Ooh. See what day, Friday into Monday. So we'll have an in-wog here. And in-wogs are important because sometimes, same as in-dogs, we can just leave them behind. And with us coming into, our high time frame key area, I definitely want to be able to make sure we don't miss it. Are those equal lows? Okay. So with us coming into our monthly fair value gap, we see that we have low resistance liquidity, an accumulation level. I'm going to delete this. An accumulation level here. Here as well. And then here as well, right? See our range, and our range again. Okay. We now see that we're seeing that we're kind of having some reaction off of this daily order block, fair value gap. Okay. Okay. So going into Tuesday, we see Tuesday wick down, almost soup the previous day low into the in-wog. And now we can almost confirm by us breaking the high and closing above it that Wednesday will go even higher. So not the best suit possible, because we're going into a Thursday and Friday, and with Thursday being the low of the week, I maybe could have gotten there. Don't see an entry because of how full the candle was. Honestly, I could have got in on the daily candle, but I don't want to go up to the weekly candle or the monthly candle in it, not be able to show it correctly. Alright. So, with us closing above and our order block, if we were to retrace, get in, order block entry would be right here anyway. Not that far. So we're just going to go light risk with one contract and see where it can go. Perfect. And as I have marked here, now we want to put a mark on the whole range. Okay, we see that we have a obvious fair value gap right here, and then none above. So if we deliver from this monthly fair value gap, how we should inverse this fair value gap, there should be nothing stopping us from holding all the way to the buy side level. Okay, kind of fake tops, nothing leaving a fair value gap now that we've came all the way down here. It's just a bunch of low resistance liquidity. Okay, we see that this order block and fair value gap are being respected. We see a market maker buy model within the accumulation range, accumulation range, accumulation range. Our smart money reversal into the high time frame key level. Alright, we're also delivering from a discount. You go to the next swing low, which is this one. Swing low to swing low. You see we're right at OT. Want to go to the next low. Right at equilibrium. And then you can see that differently on the weekly and the monthly time frame, but we're going to stay on the daily just so it doesn't move our position or our execution. Alright? Let a candle play out. Okay. So, how we saw down here with Thursday being low of the week, with how quickly we're delivering from OTE and everything else that I've labeled, I think, Friday could be an expansion day. Or, Thursday could end, high of the week. But with this being down at the order block, you don't have anything to worry about. Expansion day, which is good. Let's see what the next week handles. No soup, maybe an SMT here. Low time frame order block. Low, or breaker as well. Let's continue. Break this sell side level into our fair value gap that we've already delivered from with low resistance liquidity above. We should start to accumulate now and then finish off our market maker buy model. See if we can sweep these lows and get another entry. Coming into a Thursday. Monday, not liking it. Tuesday, close within the daily rejection block. Should finish off our market maker buy model. You could hold some for more. See? But just for sake of the video, I wanted to get at the buy side level to keep our rules in place. I should have looked at my rules and said, oh, this is Monday. Should keep continuing. But that's how it rolls. And we can see also, you're like, you're not buying at any type of OT, even under, equilibrium price here. But with us turtle souping this low into the fair value gap in the second leg of the accumulation of the market maker buy model, I had confidence that we were going to continue higher. Right? 1, 2, 3. 1, second leg, sweep the lows, and finish the market maker buy model. And that's going to end our turtle soup for dummies. As you saw, we traded with the high time frame order flow. Against the low time frame order flow, we saw the daily retrace bullishly, and then we followed it down, as well as used our obvious gap from the monthly time frame into a turtle soup long, going down to the daily time frame. Okay, we used what buy side and sell side levels we saw that were fake and which ones were clear. Okay, we saw where and how our liquidity was engineered, as well as explained and saw which PD arrays were being disrespected and respected, as well as when order flow changed, which ones started to get disrespected, as well as, became respected. All right. We didn't go over much time-based liquidity, as I may have wanted to, but being on the high time frame, it's hard to get into the low time frame time-based liquidity. You more or less go over, weekly high and lows, and then the daily high and lows. As we saw, we closed above the Monday high with the Tuesday candle, and I was pretty confident in us continuing higher with the Wednesday candle. And that Wednesday candle was so explosive, we were in such a position to be ready for the Thursday candle. And through the Thursday candle and the weekly profile, as well as seeing where we were in the range and where we were delivering from, we saw that the Friday candle was going to expand, all before they were printed. So just keep that in mind for how you can intraday trade with Turtle Soup, as well as catch the high time frame moves if that's what you're into as well. Just want to say thank you for viewing. Thank you for taking notes. A lot of small little golden nuggets in there, like waiting for a fair value gap into our key area, and not trying to catch a bottom while we're leaving that fair value gap. Sometimes we leave one, sometimes we leave two. Then we have that green candle, and then we wait for our reaction. As we saw, our green candle was on a Monday after an NWOG. We saw the Tuesday candle was then explosive upwards and closed above. And then, from there, we continued to see what we needed to do. As well as the previous week, we shorted, saw that we had our Monday, Tuesday, Wednesday, into a Thursday high of week, which we thought would be Wednesday, correct? But then we saw that it might have wanted to go for the internal buy side level. It swept that and then quickly delivered downwards. And see, in days like that Thursday or that Wednesday, where you're not so sure of the high of the week, you go to your economic calendar, see which days news are based, and you go from there. If you're not confident, you don't put yourself in a position to where the market can take your money. There's high probability days and low probability days, and you put yourself in the position where you're going to succeed or fail within those days. Yeah, I'm going to end the video here. If you have any comments or anything, please, leave them and I'll read all of them, respond to them. Thank you so much. Have a good one.